Gokul Laroia is the CEO of Asia and co-head of global equities at Morgan Stanley. He's joining us now to take some questions. Gokul, great to have you with us here. Thank you very much for your time. Appreciate it. Gokul, the big question I wanted to sort of begin this conversation with is this FII selling. And in a way, it's kind of different because it's not some broad emerging market sell-off. It's more India-specific. So just wanted your thoughts. What is the big dominating driver, Gokul, as you see it, behind this FPI sell-off that we've seen?
Good morning, and thank you for having me on the show. Look, I'm not that concerned about it. When FIIs make investing decisions, they make relative decisions for the most part. People have been incredibly positive in India for a long period of time, and when there are developments in other markets, they take some chips off the table in one and they put them in the other. So we obviously had excitement in China end of September, early October. There's a possibility that that continues. So it's just going to be a little bit of rebalancing, not much more than that. None of the investors I've spoken with are of the view that longer term, the attractiveness of the story changes meaningfully. There'll be cyclicality from time to time, but my view, certainly over the long term, is that this is going to be one way in terms of flows. The other thing I'd add, though, is, and this is unique to India in many ways, is that there's a domestic pool of capital, as you guys know, that's growing every month, that lends an element of stability to this market. So FII flows matter, very important for any market, any country. But to have the good fortune of having, domestic capital plus international capital, which a lot of markets don't have, is pretty unique.
Gokul, hi, great to have you on the show, on the program. I guess, it's that time when we have too many cues and too many events to digest and go over. But your thoughts on how India has been placed amidst all of this? And the Indian market has been falling, I think, ahead of others, a little more than others, through this whole period of foreign investors selling in October. How do you see India, which was touted as one of the best performing markets, most resilient, great growth? But suddenly a lot of that narrative is coming under question in the last 4 to 5 weeks.
So, Surabhi, it's partly because of what I said. I mean, when you're making an investing decision, a market like China, for instance, which people have been sort of chronically underweight for the longest period of time, all of a sudden there's chatter around the stimulus, there's big monetary and potential big fiscal in the offing. You need to rebalance. So that's been one part of the story. I think the other part of the story is, and this doesn't worry us, but there has been a slowdown in India. You could attribute it to a slowdown in government spending. You could attribute it to cyclicality around festivals. You could attribute it to monsoons and excessive rains. But that macro slowdown has translated into some impact on earnings. And India, certainly from a valuation perspective, some would argue is rich. And to the extent that these slowdowns happen, it's quite natural to see the underperformance that we've seen over a period of 1 month. But again, I go back to I wouldn't be too concerned about the performance in October because structurally the story, and we've written about it extensively, structurally the story remains really, really positive.
That's good to hear, Gokul, and thanks a lot for joining in here on CNBC-TV18. This is Nigel on this side. Well, the near-term trigger is the U.S. presidential election as well as what the Fed does next. What are you penciling in from the U.S. presidential election? Who's better from an India market perspective, Trump or Harris? And do you believe that 2 more rate cuts are due for the remainder of this year?
Yeah, your second question is a lot easier than your first one. I think the rate cut story, we certainly have a view that there will be 2 more between now and the end of the year. Inflation's moderating. There's no question about that. The data suggests that. and growth is slowing, but certainly remains pretty healthy. So from a Fed perspective, our assessment is that there's going to be 2 cuts this year, the potential for 4 more cuts between early 2025 and the fall of 2025. So a neutral rate of somewhere in the range of 3.25%. So that I think is on track. And as the Fed has said many a time, they're going to be data dependent, but the data that we see right now, both from an economic perspective and an inflation perspective, supports that. The election is, you see the same polls we see. I think it's tight. It's very difficult to call. From an India perspective, or frankly from a global economics perspective, I think the most significant issue to keep an eye on is the tariff framework. And if the tariff framework is excessively penal, I think it certainly has an impact on India, but I think it has an impact on global economic growth and potentially inflation as well. So to me, that's the key variable. Outside of that, frankly, I don't really see much impact.
That's one part of it, Gokul, tariffs, and definitely, we need to see what is that framework, irrespective of who takes the White House. But what about taxes? Because we know that Ms. Harris has been talking about the need for corporate America to pay more. And if that were to come through, will it trigger any sort of profit-taking, or will it create a speed bump for the market? Because till now, the market's been absolutely unfazed on this tax issue.
Yeah, potentially, but those issues are one time, and there might be a valuation adjustment sort of reflecting that. But look, one of the reasons that the U.S. market has done so well is because the economy has actually done really well. We've had consistent 2.5–3% growth, inflation coming down, corporate earnings have been super strong. We think earnings are going to be up just shy of 10% this year, between 12 and 14% next year. So the markets, I think, are going to be driven much more by the economic cycle, which will translate into an earnings cycle. To me, the biggest risk for U.S. markets is actually not the election. The election might create some dispersion in the market, and the election might create a one-time sporadic move. But the biggest risk is a slowdown in the economy that is greater than what is currently anticipated, which results in a slowdown in earnings. We spoke about India, but the U.S. market's trading at a 22 times multiple as well. A 22 times multiple implies certain earnings growth, and if that earnings growth doesn't materialize, I think there's downside. So I would stick much more to our knitting as it relates to the economy and earnings, as opposed to a big election overlay.
Gokul, we've been in this, we're sort of coming off such a euphoric phase, right, which has lasted so long, uninterrupted for the last 3–4 years. And typically when you come off these long phases, it's difficult to imagine anything else but continuation of what we've seen, right? But do you think so in that sense, there is perhaps a risk that you are, one should prepare for slower earnings growth going forward, not just 25, which most likely we will see downgrades too, and maybe even beyond, unless we see help from the monetary side in terms of rate cuts, and maybe a consumption boost as well at some point.
In the U.S., I think we're going to get that. In the U.S., I think we're going to, certainly from a monetary side, I think we're going to get, as we spoke about, I think we're going to get somewhere between 4 and 6 cuts in the foreseeable future, which would certainly be a
Gokul, my
positive.
question,
there's chatter
was
about quantitative tightening.
Yeah, my question was about India. Sorry.
Yeah, look, India. Again, it's funny that the parallels are actually pretty high, which is, India is pricing in, certainly the markets are pricing in a strong macro and strong earnings. And to the extent that that does not materialize, I think there is downside. But look, just given what we're seeing from a government investing perspective, which obviously has an absolute impact, but what's much more interesting is that it has a multiplier effect in that it stimulates both private investment and foreign investment. I mean, one of the reasons I'm here today is we're actually inaugurating a new building where we're actually housing approximately 8,000 people. And this is one of our global centers. We have two, one in Mumbai, one in Bangalore. The reason I bring this up is we're putting much more investment into India because the infrastructure now is world-class. And the experience we had during COVID gave us the confidence of doing that. So we're investing in infrastructure. And this is Morgan Stanley. You could extrapolate this across a whole range of different enterprises. But the thematic, actually, the underlying thematic is actually the same. So if you have state investment in infrastructure, you've got private investment, you've got foreign investment, that's going to translate into a level of growth that I think is actually going to be pretty attractive. And then you have the possibility of urban and rural consumption coming together, which hasn't really happened so far. So there's that to look forward to. So my view is that, look, structurally, the story is a positive one. It's never a straight line. There'll be periods of time, like October, for instance, and frankly, perhaps this quarter from an economic perspective, that growth slows. But we don't have excesses in this economy. You look at your fiscal deficit, your current account deficit, the levels of leverage, interest rates, inflation, et cetera. Yes, there's room for rates to come down a little bit, but I don't think that that's necessarily going to be the driver. I think the driver is going to be, just the potential rate of growth over here, which if you think about the backdrop, is probably more positive than we're seeing almost any other place in an economy of scale.
That is a nice optimistic note to end on. It has a good ring to it. Gokul, thank you very much for joining in, and we hope to sort of connect with you more often. Thank you for all the perspective on the local situation here, as well as, of course, the global market setup.